Hello everyone. Welcome to the Stock Minds web channel. In a semiconductor market increasingly driven by AI, data infrastructure and cloud demand, Marvell Technology, NASDAQ, MRVL delivered a very strong Q2 fiscal year 2026 results, with revenues surging, earnings turning positive after prior losses, and multiple tailwinds in its business. Marvell is positioning itself not just as a growth play, but as a value pick for investors who believe in the long-term secular trends. In this video, we will dive into Marvell Technology recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Marvell Technology. Marvell Technology, founded in 1995, is a US-based semiconductor company focused on data infrastructure. Its business spans custom silicon, electro-optics, networking, enterprise and carrier infrastructure, storage, security, and increasingly AI-oriented platforms. Over recent years, Marvell has shifted much of its strategy toward higher growth end markets such as AI, custom processors, data centers, and cloud infrastructure. Its products are used by cloud hyperscalers, telecommunication companies, enterprise networking, etc. Its evolution from more traditional networking and storage into AI and custom accelerators makes it a company to watch in the current AI investment cycle. Marvell Financial Performance. Marvell Technology delivered a strong financial performance in Q2 2026, which ended in July 2025, with revenue reaching $2 billion, a sharp 57.6% increase from $1.27 billion in Q2 2025. Earnings per share, EPS, turned positive at 22 cents, compared to a loss of 22 cents in the same quarter last year, marking a remarkable 200% improvement. On a trailing 12-month TTM basis, revenue grew to $7.23 billion, up 37.05% from $5.28 billion, while EPS improved significantly to -12 cents from -$1.12, an 89.29% improvement year over year. Free cash flow per share, TTM, also strengthened to $1.77, rising 7.93% from $1.64 a year earlier. On the profitability side, the company's gross profit margin stood at 49.59%. Although its net profit margin remained slightly negative at -1.43%, reflecting the ongoing transition toward consistent profitability, but supported by a robust free cash flow margin of 21.2%. Returns were modest, with ROA at -0.5% and ROE at -0.75%, while the balance sheet remained healthy with a debt-to-equity ratio of just 0.36. Over the past 5 years, Marvell Technology's revenue has been growing at a 21.9% CAGR, GAAP net income has remained negative, and free cash flow has been growing at an 18.7% CAGR. Although Marvell's net income is still negative on a GAAP basis, the trend could start to turn positive this year. Marvell Fiscal 2026 Financial Forecast. Looking ahead, analysts project continued momentum, forecasting 2026 revenue of $8.14 billion, representing a 41.17% increase from 2025's $5.77 billion, alongside non-GAAP EPS of $2.80, up 78.37% from $1.57. Reflecting this optimism, analysts maintain a buy rating with a price target of $86.10, suggesting a potential 29.3% upside, and the most bullish target reaching $122, implying an 83.23% upside from current levels. MRVL stock price performance and valuation. At the time this video was created, the stock was trading at $66.59 per share. Marvell stock has declined 11% over the past year, underperforming the S&P 500's 18.6% gain during the same period. Over the longer term, the stock has risen 71.8% in the last 5 years, though still trailing the S&P 500's 96.8% increase. The company offers a modest dividend yield of 0.36%, making it more of a growth play than an income stock. From a valuation standpoint, Marvell trades at a PS ratio of 7.96 TTM and a forward PS of 7.05. Its non-GAAP PE stands at 28.7 TTM, with a more attractive forward PE of 23.78. Meanwhile, the PFCF ratio of 37.43 indicates a premium. Based on Fiscal.AI data, if we look at the valuation over the past 5 years, the forward PS is slightly above the average, while the forward PE and PFCF are below the average. This indicates a potential undervaluation, as Marvell Technology is still projected to grow rapidly due to strong demand in the AI industry. Marvell growth potential. Marvell growth prospect remains strong, driven by several factors. 1. AI custom silicon revenue surge and hyperscaler expansion. Marvell Technology's custom silicon business is a major growth driver, now involved in over 50 AI design projects with more than 10 customers. This surge is driven by hyperscalers seeking cost-effective, specialized AI infrastructure. In Q2 fiscal 2026, Marvell reported record revenue of $2.006 billion, up 58% year-over-year, with the data center segment contributing $1.49 billion, 74% of total revenue, and growing 69% year-over-year. Key design wins include AWS's Trainium 3 and Microsoft's Maya 300, supported by advances in 2 nanometers custom SRAM and 64 gigabits per second die-to-die interface IP. Marvell's integrated approach across R&D, manufacturing, and 2.5D packaging enables efficient, high-performance AI solutions. Management forecasts AI-related revenue could surpass $4 billion by 2025-2026, aiming to capture 20% of the $55 billion custom AI chip market by 2028, reflecting aggressive expansion in this fast-growing field. 2. Electro-optics platform innovation driving data center connectivity. Marvell Technology is advancing its electro-optics leadership with its Nova 1.6 terabits per second PAM4 platform, doubling optical bandwidth while reducing power and cost per bit by 30%. This innovation is a key growth factor as electro-optics contributed to a 69% year-over-year revenue surge in the data center segment. The portfolio features industry-first solutions like the 800G multi-mode platform and 200 gigabits per second per lambda optical DSP technology, enabling 1.6 terabits per second pluggable modules vital for scaling AI clusters. These interconnects, including 100 gigabits per second PAM and next-general 200 gigabits per second products, address bottlenecks in data center networks transitioning to 51.2 terabits per second architectures. Marvell's upcoming PCIe General 6 retimers and 51.2 T switches, launching in late full year 2025, will deliver comprehensive AI infrastructure solutions. With data center bandwidth demand growing over 50% annually due to AI, Marvell's electro-optics offer critical performance, cost, and reliability advantages. 3. Enterprise networking and carrier infrastructure market recovery. After prolonged weakness, Marvell is seeing a strong recovery in enterprise networking and carrier infrastructure in Q2 fiscal 2026. Enterprise networking revenue grew 28% year-over-year to $193.6 million, with a 9% sequential increase, marking a clear turnaround. Carrier infrastructure revenue rose 71% year-over-year to $130.1 million, though it dropped slightly by 6% sequentially. This improvement stems from increased capital spending by enterprises and carriers upgrading their infrastructure to handle rising data traffic and new technologies. Management noted a significant acceleration in the recovery pace of these markets alongside AI demand, reflecting Marvell's renewed focus post-portfolio optimization. Its suite of networking, security, compute, and storage solutions positions the company to capitalize on borderless campus upgrades and 5G rollouts. CEO Matt Murphy expects sequential growth across all end markets in Q3, indicating broad momentum beyond AI data center demand. Risks to consider. While Marvell Technology growth prospect is strong, we should be mindful of potential risks. 1. Technological disruption and competition. Marvell operates in a highly competitive semiconductor industry with rapid innovation. Failure to keep up with emerging technologies like AI and machine learning could result in loss of market share and revenue to rivals such as Broadcom, Intel, and Qualcomm. Intense competition also drives price wars and margin pressure. 2. Regulatory and governance concerns. Marvell has faced past regulatory scrutiny for accounting issues, including SEC charges related to revenue recognition manipulation in 2019 and other governance red flags. While improvements have been made, these historical issues suggest ongoing risks around corporate governance and financial reporting. 3. Macroeconomic and geopolitical risks. Factors like economic downturns and geopolitical instability can negatively affect demand for semiconductors and Marvell's operations globally. Geographic diversification and risk management remain critical, but cannot fully eliminate such external risks. Conclusion. Marvell Technology's Q2 2026 results highlight strong revenue and earnings growth, improving cash flow, and a solid balance sheet, supported by expanding opportunities in AI, cloud, and data center infrastructure. While its stock has underperformed the broader market recently, valuations remain attractive when weighed against future growth potential. With analysts forecasting robust revenue and EPS increases and assigning bullish price targets, Marvell stands out as a compelling long-term investment opportunity for growth-focused investors despite near-term risks. But remember, this is not a financial advice. What do you think about Marvell? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.